In your insurance proposal, you will see coverages laid out in a chart just like this. This is just the example coverages, but we wanted to take a moment to explain to you what they actually mean. So often people will buy coverage based on price and not really understand what they're getting. So let's start at the top with bodily injury and property damage. Basically, when your coverages are purchased in split level format like this, these numbers represent three things: the amount of personal injury coverage you have in an accident for each person, the amount of personal injury coverage you have as an accident whole, and then your property damage. So what this is saying is if three people are injured and they each sustain $100,000 in bodily injury, you will have coverage because you have a total of $300,000 per accident. And then let's say you have two cars totaled in that accident and each were $50,000 claims, you would have enough coverage for your auto claims as far as damages. And then let's talk about uninsured and underinsured. This is often under purchased because people feel like they should not be responsible for others. And I completely agree. However, if you're in an accident and you are injured and the underinsured or uninsured person doesn't have the appropriate coverage, your policy will kick in because you have purchased uninsured and underinsured motorist bodily injury at these limits. They operate the exact same way as your primary bodily injury coverage here. So your 100,000, 300,000, or 250, 500, etc. And to further define property damage, this is property damage liability to other vehicles, buildings, etc. Let's say you go off the road in a winter storm and you knock over somebody's doghouse and it's, $1,000. Well, your property damage coverage would replace the cost of that. Let's say you're in a car wreck and you damage somebody else's vehicle. Your $100,000 coverage would kick in. And then you have medical payments. These are like goodwill payments that the carriers make to help offset the potential for legal action. And then let's talk about your property coverage, which is your comprehensive and your collision. So this is on your vehicle. So if you're in a wreck and you need your front bumper replaced, then you're going to have a body shop do some repair work, and that's going to cost money. So you will pay deductible on your comp and collision. So in this instance, for an auto wreck, it would be a collision claim. So you'll pay a $500 deductible or $1,000, whichever your policy is sold to you at. You can have different deductibles depending on the carrier between the two different types of claims. Comprehensive claim would be things like theft or weather-related claims. Let's say hail damage totals out your car. In this instance, you would pay your $500 deductible and the carrier would total out your car and cut you a check for the actual cash value or pay off your loan depending on whether you have that coverage or not. In this particular scenario, we have no coverage on auto loan payoff. So what that means is if you have a loan for $20,000 and you wreck your car and the actual cash value of the car is only $10,000 because of all the miles that were put on and just natural depreciation, then you're at a loss of $10,000 out of your pocket to try and come up with the funds to pay off the bank note. With auto loan payoff coverage, the bank will be paid off by the carrier regardless of the actual cash value. So that endorsement will take whatever the actual cash value is and fill the difference between your loan amount. This is often called gap coverage. Generally speaking, it is a lot more cost effective to buy an insurance policy that has this endorsement than it is to buy actual gap coverage from the dealers. So take caution there. And also note that not all auto coverages offer auto loan payoff. So depending on your personal situation, you might need a cheaper product that doesn't have auto loan payoff available. Be sure to discuss this with your licensed advisor if you have questions on how this option works. And then you have premium roadside as an option that we tell people they should often purchase outside of their auto insurance. At Better's Agency, we bundle this with our packages, so it's a seamless purchase. But you're getting a premium product with concierge, trip planning services, multiple tows, lockouts, etc. But the key with it being outside of your auto coverage is that it prevents you from having a claim on a simple roadside claim. So let's say you have a flat tire and a tow truck comes out and helps you with it, and it only costs the insurance company $100. Well, at the end of the day, that $100 is still a claim on your insurance if you purchase roadside through the auto insurer. So we always recommend keeping the roadside assistance package separate from your auto because it will help fend off rate increases